Will there be a definitive cut in production, which is very unlikely? The last time we had a bit of a shock in production was when Iran was notably attacked Saudi Arabia in 2019, and their ability to do that has been has been very much limited now by the Israel gaining air superiority over Iran. So to me, this is a bit of a shorter term thing. It's going to accelerate those pre-existing trends that we have. Our demand estimate revisions remain downward on a global basis, most notably from China, and supply estimate revisions remain upward. This higher spike is just, I think, giving producers a chance to sell forward, bring on that supply, and responsive traders who've been waiting for a bounce, I think, are going to be jumping on board.
You know, Mike, prices prior to this pop higher because of the geopolitical tensions, prices were getting down to that level where you start wondering about the U.S. shale producers, whether they start turning off the spigots. You know, we saw the rig count was very low. Is this pop enough for them to get going again, or are they going to be on the sidelines and just wait to see how long it lasts?
I think it's more the former. First of all, that's the key point. What's the number one force to reduce that excess of supply that's been coming out of the U.S. and Canada? This trend has been in place for almost 20 years. The number one force to reduce those forces is lower prices. Now, you noted that starting to kick in. The key thing is we started seeing rig counts drop a little bit. Let's remember the significance of rig counts and drilling technology. The same rig counts right now, that level's about the same as 2010 in the big picture, yet we've doubled production since then. We can now drill numerous laterals and go out for many miles. So it's that technology that's significant, bringing on more supply. The demand's decreasing. But what matters is now we've had that bounce, and you can see that in the forward curve. The prices are still lower because I think producers are thinking, okay, my break even in the U.S. between 50 and 55, and the front contract just bumped to 75. What's that going to do for supply? If I can sell a little bit forward, you bring on the supply.
All right, let's switch to agriculture, because I grew up here in New Jersey, and it was, when we're talking about corn, it's knee-high by the 4th of July. That's when you know you got a good crop and everything's going to be good. But I know, Mike, the real stuff is grown out where you're from, out there in the Midwest. Yeah. We're talking Nebraska, Illinois, Iowa, all those great states out there. How's the planting season? How's the growing season? What's the expectation for some of those big grains that are so important for our farmers?
It's going very well so far, Paul. We've added about 5 to 6% to corn planted acres this year because the prices were low and there's a lot of incentive to produce more corn. So if we have a normal crop year, prices will continue to decline towards that cost of production. In the U.S., we estimate that below $4 a bushel, and corn right now, corn's about $4.50 a bushel. So to me, that's the risk, is we have a normal supply, a normal year. You basically need a drought for these prices to go higher. And then number one force for all the grain processors is that massive supply coming out of Brazil. And why did it come out of Brazil? Number one, the technology is kicking in. China's helping, but because prices pumped on the back of Russia's invasion of Ukraine. Pump up the prices, bring on more supply, elasticity kicks in, and we're still heading towards that lower price cure. So unless we get a bad drought this year, prices will probably continue to bounce. But we just haven't had a scare yet. Typically, you get a bit about a scare coming into July, August.
Mike, it's always great to talk to you because we know that if something has a price chart attached to it, you got a take on it. So I'm curious what you think about Bitcoin. You know, really been range bound lately, despite all these corporate treasury buying. What do you think's going on there? Are we just stuck in the range for a while?
Well, Bitcoin right now reminds me of the mantra, you're supposed to be selling when they're yelling. When Michael Saylor, who famously got bullish, we discovered Bitcoin, it was around 10,000 in 2020. That was the time to buy. It was really cheap and everybody hated it. Now that everybody loves it around 100,000, be very careful. The significance I like to point about Bitcoin is since it's reached that threshold at 100,000, the first end of the day above that level was on December 6th. Since that day, it's about unchanged, maybe 105,000 right now, but gold's up 30%. So to me, that showed us the limits of this highly speculative digital asset, the limits of U.S. stock market risk asset appreciation, and gold is taking the mantra, and I think it's still a bullish factor for gold, particularly if Bitcoin declines.